Hi guys, welcome to this Money Control live stream. You're watching Opening Bell right here on Money Control with me, Nandita Khemka. The cues coming out of global markets are fairly dismal. Yesterday we saw Wall Street see a steep sell-off overnight. It's a reminder of the August 5th sell-off that we had seen on the back of slowdown fears. And once again, slowdown fears are back to haunt Wall Street. We saw the Nasdaq plunge as much as 3%, the Dow skid over 600 points, even the S&P 500 logged in losses of somewhere around 2.5% or thereabouts. So yes, slowdown fears are back. We had the ISM manufacturing data coming out of US, not very encouraging, and that's why we saw a sell-off playing out on Wall Street. This morning, US futures were also in the red, and Asian markets have also seen a sharp plunge, and the GIFT Nifty, of course, hinting at a gap down start for the Indian market. Also important to note that crude has seen a sell-off, which is a positive for us because OMCs, paint companies, they will get a leg up because of that. So watch out for those stocks in trade. Of course, all your stock related queries as usual will be in focus. So if you have any queries, keep them coming in on a live feed on YouTube. We'll try and take them up. Lots lined up over the next 40 minutes or so. But before we move on to all that, let's take a look at the top headlines at this hour. Wall Street sees worst sell-off since August 5th. The Nasdaq plunges over 3% while the Dow slumps over 600 points as weak manufacturing data sparks recession concerns. Chip maker Nvidia leads the sell-off in tech stocks, falling over 10%. Asian markets open sharply lower following dismal cues from Wall Street. The Nikkei corrects over 4% as tech stocks crumble. China's services PMI is also lower in August compared to July. The GIFT Nifty, as I mentioned, signals a 180-point cut on the Nifty. That, of course, we'll get to know at 9:15 a.m. Crude prices correct nearly 5% to erase all gains for the year. Brent slips to $73 a barrel as demand concerns spike following weak manufacturing data from China and the United States. Gold, meanwhile, hits lowest level in a week amid dollar strength. And among stocks to watch out for today, Godfrey Phillips finalizes the sale of its retail business to a startup called New Shop. Sources say the term sheet has been signed to transfer 24/7 stores and the transaction will be completed this month. Also watch out for GIC Re as the government is offloading nearly 7% via offer for sale. Well, on that note, let's take a look at the setup and how we shut shop yesterday. We ended extremely flat yesterday with both the Nifty and Sensex marginally in the green and red respectively. The Nifty, of course, extending its winning streak to 14 consecutive days. Of course, the best it's a record winning streak for the Nifty, best on record. But Sensex ended marginally in the red. It was a sixth straight session of record close for the Nifty, amid volatility. 14-day long rally we had seen on the index, but of course that is at risk today because of the kind of cues that we are getting from global markets. The Nifty Bank Index deserves mention because in the last hour of trade, it recovered nearly 500 points from the day's low to end higher by about 250 points or thereabouts at somewhere around 51,690. So whether or not the financials will continue to see gains or not, that's something that we'll be watching out for because yesterday, this pocket lent support to the index. ICICI Bank, HDFC Bank, Axis Bank, all of these stocks ended off days low. In fact, FMCG stocks were also in focus given the fact that ITC managed to hit a fresh record in trade. In terms of FNOQs, the put call ratio has risen to 1.2 vis-a-vis 1.18 in the previous session. And talking about stocks in the FNO ban, Aditya Birla Fashion is the new entrant, but Balrampur Chini and Hindustan Copper continue to be in FNO ban since they were placed yesterday and on Friday. In terms of the fund flow picture, foreign investors remain net buyers for another day. So 1,000 crore worth of buying coming in from foreign investors in the cash markets. Domestic investors as well bought shares to the tune of nearly 1,900 crore rupees in the cash market. So all in all, things not looking great this morning given the fact that we have Wall Street taking a sharp plunge overnight and of course Asian markets also feeling the heat. The Nikkei was down over 4% and it was the chip maker stocks in the Japanese market that are seeing sharp cuts, given the fact that we saw Nvidia, clock in almost a 10% kind of a slump. Of course, there are reports that the Justice Department has served subpoenas to Nvidia. These are source based, and Nvidia, of course, reacting to that. But aside of that, recession concerns are back to haunt Wall Street in light of the recent manufacturing data. But let's figure out whether a guest has joined or not. We have Rajesh Palviya, who's the Senior Vice President Research, Head Technical and Derivatives at Axis Securities. Rajesh, great to have you on the show. The setup isn't looking all that great this morning, given the fact that we are seeing sharp sell-off across global indices. But would you say that this was the much needed dip that we as domestic investors were waiting for on the index?
Good morning, Nandita. So we have almost rose for 13 consecutive day, and so it was expected that as we are seeing continuous upward trajectory. So there has to be some cool off has to be there in market to again to give opportunity to buy and accumulate good quality stocks in the decline. Though overall structure for the market is still bullish, but yes, we may again, going to react to the global cues, as we have seen a sell-off in US market as well as Asian markets are also showing, negativity. So I think we may also see a gap down opening. Possibly Nifty may open below 25,200. That's the important level. So if we slip below to 25,200, then possible follow-up selling we could see in the market, as a major put-based concentration is placed at 25,200, 25,100 strike. So if we break these two levels, then possibly follow-up supply pressure of unwinding would be there, and then we may retest a level of 25,000. That's the important and critical support area for this supply pressure if we see further in the market. So 25,000 needs to be watched closely, as a major monthly put based concentration is placed at 25,000 level. So that level needs to be protected by the bulls in this fall, and if it's happened, then some support buying action can be there from those level. And on the higher side, 25,350 may act as a supply zone for this near term setup. For Bank Nifty, it was very interesting to see in the Bank Nifty in the previous day. We have seen a breakout above 51,500, but again, as we are opening lower, so maybe again we will break below 51,500, and if it's happened, then maybe supply pressure would be there in the Bank Nifty also, and again we may retest important support area of 51,000. That's the critical level for Bank Nifty. So 25,000 and 51,000, these two level needs to watch in today's session. If we able to hold out this level, then I think our market will again try to attract some buying interest.
Okay, we can attract some buying interest, of course, on dips, but couple of sectors that will be in focus today will be IT for sure. Given the fact that we've seen Nasdaq tumble over 3%, chip maker stocks have been under pressure. Anything that you'll be watching out for there on dips that could be bought from the large cap IT basket?
So as the IT sector is in uptrend, and we have seen almost IT index has marked an all-time high trajectory in last couple of days. And looking at the most of the large cap as well as the mid cap IT space, most of the stocks managed to give breakout on the near term as well as on the medium term structure also. Maybe we could see some dip in line with the global cues. If we analyze the some of the large cap like TCS, so possibly if TCS correct and comes near to 4400 level, again it's attractive level, because 20-day moving average is placed at around 4400 level. So that level needs to watch for TCS. If it's hold 4400, I think again buying interest may emerge around those level, as structure for TCS is still bullish, large cap IT, and again HCL Tech, that stock is also looking promising. So in decline, if we get opportunity around 1725, 1730 kind of level in HCL Tech, that level is again attractive to buy around those level. So I think a minor dip can be used as a buying opportunity in large cap IT also. Like we like TCS, HCL Tech, Infosys. These three stocks are looking promising from the large cap IT, and from mid cap LTTS is our preferred choice, as well as Birla Soft. So I think in decline we would like to again buy in the decline in all these stocks.
Okay, buy on decline should be the strategy for IT stocks as well. And some of the names that Rajesh pointed out are HCL Tech and LTTS. But another pocket in focus would be the paint sector and even OMCs for that matter, given the fact that we've seen crude tumble quite a bit, right? Crude, in fact, has erased its 2024 gains. So, of course, that's a positive for us. Paint stocks, OMCs, these are some of the stocks that could be in focus and could see a rally. So, anything in the paint basket that's catching your attention now?
I think Nandita, Asian Paint, that stock after a significant corrective move, now stock is making a rounding bottom sort of formation on a weekly as well as on the daily chart. The way stock is holding above 3100 level, I think there is a possibility that we may see a good up move in Asian Paint towards 3250, 3300 kind of zone on a positional perspective. So Asian Paint can be looked at the current level with stop loss of 3100. Another stock from the mid cap that is Kansai Narrow, like that stock is also consolidating since last couple of days. And once stock manages to cross about 305, 306 kind of level, I think there could be a breakout really we can witness in Kansai Narrow Lake, and then possible target towards 340 to 350 we could see in positional perspective. So here also one can buy an equivalent with stop loss of 285.
All right, those are the paint stocks to watch out for. Asian Paints and Kansai Narolac. Just about 10 of 12 odd seconds to go for the opening bell. Of course, we are looking at sharp cuts. When I say sharp, somewhere around 150 to 200 point cut on the Nifty. That's what is being indicated by GIFT Nifty as well as in the pre-open as well. We are seeing the Nifty at somewhere around the 25,100 mark or thereabouts. So just about 0.5% lower for the index, 150 point cut, and it's a 480 point cut on the Sensex. 82,000 holds on the screen as of now. We'll have to see whether or not we manage to hold on to that level or not. 500 point cut on the Sensex as we speak. The broader markets, the cuts are in tandem with the benchmarks. So 0.7% kind of a cut coming in on the mid cap index as well. 51,500 has been broken on the bank Nifty. That's down by about 250 points or thereabouts. 0.5% cut there as well. So, of course, as we were expecting, the texture of the market is on the downside, and technical experts, of course, are of the view that any dip should be used to buy into stocks right now, given the fact that we are coming off a 14-day winning streak, which is the best on record for the index. Let's take a look at some of the other sectors then. All of the sectors are trading in the red as was being expected. IT, I want to see what IT pack is doing. 2% cut on the IT pack, and metal as well. Given the fact that we are getting weak economic data from China as well as US, metals have been under pressure. Even yesterday they were under pressure, and metal counters were among the top laggards. Today as well, it's a 1.5% cut coming in on the metal pack. So IT and metals, these are the two pockets that are taking it on the chin in the wake of dismal global cues. What other sectors are doing? Well, PSU banking pack is down 1%. You have autos 0.5%, Nifty Bank Index, as I mentioned, 0.5% lower. Energy pack is also trading with cuts of 0.5%, and so is the FMCG pack. But let's see, what individual stocks are doing. Well, the gainers list is very slim. Just about 4 Nifty gainers, and BPCL and Asian Paints happen to be the top 2 Nifty gainers as was being expected. BPCL up almost 2% and Asian Paints up almost 1% or thereabouts. Aside of that, HDFC Bank, slim gains but managing to hold out in the green, opposite to what the Nifty Bank is doing at the current juncture, and Sun Pharma is gaining somewhere around 0.5% or thereabouts. In terms of the losers, ONGC, Hindalco, LTI Mindtree, Wipro, JSW Steel, Infosys, Tech Mahindra. So all these metal and IT counters under pressure. L&T is the other one that's not doing well. SBI under pressure, Tata Consumer, Bharti Airtel, M&M, Eicher Motors, some of the auto names as well, and ITC, which hit a fresh record yesterday, that's also under pressure. So all in all, as expected, it was it's in fact a weakish start, almost 200 point cut, but 25,000 that's still on the screen, so nothing really to worry about. But the Sensex has broken below that 82,000 mark. Looking at the open, Rajesh, would you place your floor or base at 25,000 as you were mentioning before the market open?
Yeah, definitely, Nandita. 25,000 likely to act as a support area for this decline. I think some buying interest is already there in the market after this gap down opening. But I think we will wait for another 5-10 minutes to settle down this supply pressure, because still everybody will try to adjust their position, looking at the global cues. I think some cautious approach would be there in the initial trade. So, but yes, levels need to watch is 25,000, and for Bank Nifty, as we mentioned, that 51,000, these two levels needs to watch. Though we are trying to hold 51,300, that is the first put base concentration also. So I think that is also important to watch for intraday perspective, 51,300 to 51,200. That level needs to watch in this initial dip. If we don't slip below to 51,200, I think again here also we could see some pullback action in Bank Nifty, as lot many long position was already created in the previous day, as we have already seen the breakout above 51,500. So put base is now placed at 51,200 to 51,300 range for Bank Nifty. So here also, as we are having this weekly option expiry for Bank Nifty, so I think the Bank Nifty may give some interesting move in intraday perspective. So one should watch 51,200 to 300 range closely. I think if it's able to defend this level, some buying interest we could see in Bank Nifty from these levels.
Okay, it will be interesting to watch out for the chart of Bank Nifty. It was interesting yesterday also, given the fact that it was the last 1 hour that we saw a very smart spurt coming in on the Nifty Bank. But what would you be recommending really for our investors and traders, in terms of stock picks?
I think some of the defensive stocks one should focus at this juncture, and we are focusing on FMCG is the space where some traction is already seen in last couple of days. So I think ITC is on our radar. Almost stock is now negotiating with its 1 year consolidation, swing high. So I think if ITC manages to cross over 508, 510 level, I think there could be a breakout really we can see in ITC, and possible target towards 530 to 540 we could see in ITC. So that stock can be looked at. As you already discussed about Pent stock, I think that Asian Paint, Consign, Aerolec, both stocks are attracting buying interest. I think from mid cap space, I think Indigo Paint can be also looked at. That stock is also, trying to, negotiate with its multiple supply zone on daily chart. I think if it crosses 1485, 1490 zone, I think there would be another rally in this stock, and possible target towards 1530 to 1540 we could see on the intraday perspective. But on the positional perspective, I think Pharma is a space where we are holding our bullish view. I think Glenmark can be looked at, though there is a correction in the stock after opening. I think if you get opportunity around 1650, 1640 kind of zone, so I think Glenmark is looking attractive. We may see again, rally in this stock, and possible target towards 1730, 1740 we could see on a higher side. And another space that we are focusing at this juncture, that is, oil and gas sector. That space is also looking promising. So I think that space can be looked at. BPCL is our preferred choice. We are projecting target towards 385 to 390. Keep your stop loss around 350. And another is insurance. SBI Life is our preferred choice. That stock can be looked at. All-time high trajectory is already there. We are projecting target towards 1980 to 2000. So your stop loss should be at around 1865 to buy and accumulate SBI Life also.
Okay, a whole host of recommendations coming in from Rajesh, and of course BPCL, defying the market trend, of course, on the back of a slip off or a cool off in crude prices among the top Nifty gainers today. But one stock in focus today will be the GIC Re, given the fact that the OFS has opened up and the government is divesting somewhere around 7% stake via the offer for sale route. Base size is at 3.4% almost, and it has a green shoe option of 3.4%. it's open for non-retail investors today, and for retail investors and employees, it is going to be, it is going to open tomorrow. The stock per se, at one point in time, couple of months ago, I think it was doing extremely well. But with today's 4.5-5% kind of a cut, it has almost halved its monthly returns. On a month basis, now it's giving just about 4.5 kind of returns. On one side, life insurers are doing well, and it's also among your recommendations. But what about GIC Re? Would you look at this stock as well? And today's dip, should that be utilized as a buying opportunity?
So yeah, after this dip, stock is almost trading near to its 20-day, 50-day moving average support area. So I think 395, 400 is important level to watch for GIC Re after this dip. I think if it's able to defend 395, I think support buying action may come in this stock, and some pullback really towards 420, 425 we could see in next couple of days. So I think yes, in this decline, one should buy and accumulate this stock with stop loss of 385.
Okay, that's about GIC Re, but I want to talk about a Mankind Pharma as well. The stock is up almost 20% in the last 1 month, and this morning there is news flow that the company is transferring its over-the-counter business to its unit via a slump sale agreement, and it will be divesting its over-the-counter business, which includes a range of non-prescription products, and the move is actually aimed at streamlining its operations and focus more on the core pharma business. 20% up move in the last 1 month. Would you wait for a dip to come in, or do you think there is more upside that the charts are signaling, so you should jump in right now?
So pharma is a sector where we are seeing, continuity of uptrend is there, and lot many stocks have already, inching towards their all-time high trajectory. And the way Mankind Pharma has already moved up from its recent swing low of 2000 level, I think one can buy and accumulate. Even the overall structure for the stock is on the bullish side. Long-term structure is bullish, and the stock is almost now trading negotiating with its all-time high trajectory. The previous swing high was at around 2400, 2500 kind of zone. I think if it crosses 2500, then continuity of rally would be there. But I think a minor dip we have already seen in this stock. So I think buy and accumulate in a staggered manner would be the right strategy. 2300 should be your stop loss. On a breakout about 2500. I think rally can extend to 2700 to 2800 also.
Okay, those are the levels to watch out for on a Mankind. I want to talk about a Godfrey Phillips also. This stock has seen great up move, right? If you look at the returns over the last, I think 1 month, it's been a 65% kind of a jump. In the last 6 months, the stock has literally doubled. The company has finalized the sale of retail business and signed a term sheet as well. The sale of retail business 24/7, that will be sold to a startup called New Shop, and the deal will be closed by somewhere around September end or thereabouts, and the work has already begun to transfer the shops to New Shop. Look at the stock move today. I think it's not really opened here. Flat as we speak, but given the kind of returns that it's given, should one use rallies to book partial profits, or how should one approach this?
So I think the overall structure for the stock is bullish across all time frames. Stock is making a series of high top, higher bottom formation, and it's very difficult to take decision when the stock is continuously in uptrend, whether to book profit or still to hold. So I think trailing of stop loss would be the right strategy to ride these kind of stock, as long-term structure is bullish. So I think I would advise to keep stop loss of 6400 till stock not slips below to 6400. I think one should hold their long position. And I think that the way stock is holding and consolidating at a higher level, if at all stock crosses above 6660, I think this really can extend to 6900, even 7000 kind of level also. So I think trailing of stop loss to 6400 would be the right strategy to ride these kind of stocks.
Okay, take note of the levels that Rajesh just mentioned for a Godfrey Phillips. But let's take up some viewer queries on that note. Quite a few trickling in this morning. The first one is coming in from Jiffin. Wants to know your thoughts on a sugar stock, EID Parry, for the long term. Today the stock is, you know, it's kind of flat, 0.5% up, but it has come off opening lows. And I think in the last 1 month or so, the stock has seen a 10% up move. Sugar as a pocket has been in focus of late. Uh, how is EID Parry stacking up vis-a-vis the others?
So I think sugar stocks are in focus since last couple of week. There was some announcement related to the this space also, and I think a lot of accumulation we have already seen in most of the sugar space. EID Perry, yes, we are holding our bullish view. Long-term structure is bullish. The way stock is consolidating since last couple of days, there is a high possibility that stock may attempt to give breakout above 840, 850 kind of zone. And once that breakout happens, I think that there is a possibility that stock may scale up to the level of 1,000 level also. So for long-term perspective, yes, our view is bullish for EID Perry. One can hold on the position at this juncture. We would suggest to keep a stop loss of around 760 to hold long-term investment in EID Perry.
Okay, that's the view on an EID Parry, but let's take up a query on some of the defense names then. They also have been in focus. Shatabdi Ghosh wants to know your thoughts on an HAL and wants to know an entry point, a suitable entry point for Hindustan Aeronautics. HAL, BEL, Bharat Forge, Mazgaon Dock, all of them are in focus given the fact that the government has okayed 10 capital acquisition proposals worth almost 1.5 lakh crore rupees. HAL was in focus yesterday also, and today we have a report by Antique on defense, and Antique has mentioned that these proposals they could translate into tremendous opportunity for some of these domestic Indian defense manufacturers. So HAL, of course, at one point in time we were seeing rip-roaring rallies and stupendous returns when it comes to some of these defense names. But now in the last 1 month or so, the returns have been fairly tempered. So do you think now it's a good time to enter before these stocks take off again?
Yeah, definitely. The long-term story is intact and long-term structure is bullish for HL. I think this correction is giving you again, opportunity to buy a quality stock in this decline. I think yes, one can start buying in this stock. Keep buying on a staggered manner. I think 4,500 is the key support area for HL at this juncture. So I think if you get opportunity furthermore from the current level on the downside, you can buy and accumulate this stock. Your long-term stop loss should be placed at 4,500. Possible target on the higher side once stock crosses above 5,200, 5,250 kind of zone. I think possible target towards 5,500 we could see over a period of time in HL. So I think buy and accumulate is the strategy for this stock.
Okay, buy on declines. That's the strategy. Shatabdi, hope you've taken note of Rajesh's answer. The next query is coming in from Kartikeya Singh, wants to know your thoughts on Indrapra Medical Corporation. Should he look at entering at current prices? The stock is up 70% in the last 1 month. Rajesh, is it a good time to enter? How is the risk reward stacking up?
So stock has shown very decent rally in last couple of months. The way stock has moved up from the level of 240, now it's 440 in a couple of months. I think if you get any cool off in the stock towards 410, 400 kind of level, I think that would be again interesting level to buy this stock. Overall structure is bullish. If you are holding, you can ride the rally. Your stop loss for holding the positional perspective is 400. Till stock is holding above 400 level, I think trend may likely to remain on the bullish side. We may see target towards 480, even 500 kind of zone. The way stock has moved up in last couple of months, I think there is still buying interest in this stock. I think one can hold on the position. 400 is the positional stop loss. So it's a deeper from the current level. But I think if you get any minor dip towards 420, 415 kind of level, I think that would be again, level to re-enter in this stock.
Okay, that's the view on Indrapra Medical. Hope that answers your query. The next query is coming in from Gautami. wants to know your thoughts on ZEEL. She bought it at 149 and now of course there's been a downtrend. The stock is at 137 or thereabouts. In the eye of storm really, Z, and it is a very volatile counter, right? She's making some bit of a loss here. What should she really do with the Z right now?
So still, stock is struggling, though there was some news flow for the counter, but still that news was also not, able to take out this stock from its concession zone, which is placed at around 160, 165. So I think until the stock not crosses those level, it may struggle to, give breakout above those level. 130 to 160 to 160 is the broader range for the stock for last couple of, months. I think one should those who have patience to hold the stock for a little longer period can hold on the position. Trader, so I would say avoid this stock. Wait for 160 65 kind of breakout, then only try to take some trade in this stock. I think stock may take time because still there is no clarity on the stock, how the company is going to shape up. So I think stock may remain in consolidation. 130 to 160 would be the range. On breakout of 160, yes, there could be a possibility of 185 to 190 kind of zone on the high side, but I think it may take time.
Okay, that's the view on a Z. Hope that answers your query. The next query is coming in from Satya CK. Wants to know your thoughts on Fino Payments Bank. He wants to know whether he could add at current levels, and he wants to know the 1-year target. Fino has done over the last 1 month, but over the last 5 sessions, it has been fairly sideways. What kind of targets should you or would you be watching out for here?
Nandita, I missed the stock name. Which stocks are you talking about?
Fino Payments Bank.
Okay.
Fino.
Okay. So yeah. So now stock is in process to form a base. I think we have seen a long time stock remain in a range of 250 to 350, and now stock managed to give breakout. The way stock managed to break out on monthly chart, I think there is a possibility that this stock may exhibit good amount of rally towards 480 to 500 kind of zone. So I think one can hold on the position. Those who have already bought can hold on the position. Even fresh buying can be done. 380 should be your stop loss target. 480 to 500.
Okay, that's the view on a Fino Payments Bank. Hope that answers your query. Let's take up a query on HDFC Bank then. Ajay Kuliye wants to know your thoughts. The stock was holding out today, but I think it's slipped into the red again. Trading flat with the negative bias, but within the private banking names, how is HDFC Bank looking to you right now? Would you take a trade here vis-a-vis an ICICI Bank or a Kotak Bank for that matter?
So if I have to take a trade in private banks, so I think I'll go with ICICI Bank. That stock is already trading above their breakout level, and the way stock is trading above to 1200 mark, I think our choice for trading would be on ICICI Bank. And we believe that this stock has potential to again give a breakout about to its all-time high trajectory, and we may see a new all-time high trajectory soon in this ICICI Bank. So our preferred choice would be ICICI. But yes, those who are looking for some investment and for longer term perspective, I think HDFC Bank, they can hold on. But yes, it may take time to give breakout above 1700, 1730 is the important level on the high side. So until the stock not crosses above 1700 mark, it may remain in the consolidation range. Consolidation range would be around 1580 to 1700. On a breakout above 1700, we could see target towards 1800 to 1840 kind of zone, but it may take time. So if you want to do trades, try to focus on ICICI Bank till it's trading above for 1200.
Okay, that's the view. Hope that answers your query. The next one's coming in from Peter Williams. He wants to know your thoughts on an Exide Industries. Exide has been fairly sideways. If you look at the 3-month chart, 1-month chart, hasn't done much, hasn't fired up much. Do you think this is the best time to take positions and wait for an up move?
So for trader, I would say wait for 500 level to cross. But for investor, yes, they can buy and accumulate the stock as long-term structure is bullish. 3-month corrective move is already done in the stock. I think 470 is the key level at this juncture for investment. For point of view, I think already stock has corrected and almost we are trading near to the important support of 470. So I think buy and accumulate could be a strategy. 470 should be your stop loss. Once the stock crosses above 505, we could see a good traction on the buying side. 540 to 550 would be the first target. If it crosses 550, 640 would be the next target on the positional perspective for the stock.
Okay, that's the view on an Exide. But the next query, Pon Rajesh again wants to know your thoughts on a GAIL. GAIL under pressure today, and so is ONGC. I think even the last 1 month charts of GAIL are suggesting that moves haven't really been all that enthusing. Within the upstream oil companies, would you pick an ONGC in comparison to GAIL?
I think for positional perspective, we like the GAIL. The way stock has moved up in last couple of months, and stock is comfortably holding above to 50-day moving average. I think GAIL would be our preferred choice for positional perspective. 210 is the stop loss to buy and accumulate the stock. ONGC though this stock is also looking promising as the stock managed to give breakout on the long term chart. And I think the way stock has given a breakout about 300 kind of mark, I think till ONGC is holding about 300. I think here also there is a possibility of follow-up buying action to come. Immediate supply zone is placed at around 325 to 330 zone. If stock able to take out about 330, the rally can extend, and we could see target towards 365 to 385. So ONGC and GAIL both are looking promising on the technical front. Overall long-term structure for both the stocks are looking bullish.
Okay, that's the view then on ONGC and gold. Just about a couple of more queries to go. We are running out of time, but just spotted a query on Tata Steel on our feed. Metals, of course, feeling the heat. The macro data coming out of China and US are nothing really to get excited about. No hints of a concrete recovery in China as such. Abhishek Singha wants to know your thoughts on Tata Steel for the medium term. Your thoughts? What kind of levels would you be watching out for with the 3 to 4 month perspective on this stock?
So we have seen corrective move in Tata Steel, and now stock is almost trading near to just slip below to 50-day, 20-day moving average also. We have already witnessed some corrective move, and stock is now approaching towards its previous important support area of 145, 140 kind of zone. That is important and critical for the Tata Steel in this corrective move. Though there is still volatility in global market, China is not giving us any kind of hope at this moment. So I think metal would remain volatile for some more time. Technical structures are suggesting that 140 is the stop loss if you are buying this stock at this juncture. So that stock, that level needs to keep closely on observation. If it's break below 140, then I think one should exit, because then stock may correct further. So if you're buying, 140 should be your stop loss. Some pullback action we could see once the global sentiment stabilized at a certain level. Then in pullback, 160 needs to watch closely. If it crosses 160, then rally can extend to 175 to 180 zone. But if you're buying, 140 should be your stop loss.
Okay, that's the view. Use 140 as a stop loss on Tata Steel. Hope that answers your query. Quickly, 2 queries in. Alex wants to know your thoughts on a Concor. How would you approach this stock? And the next query, I would just spell it out here only. There is a query on Godavari Power from Prajay. He wants to know your 1 year thoughts or 1 year view on GPIL. So these 2 stocks.
So Nandita, Concor is showing corrective move since last couple of week, and the way stock is moving in down sloping channel on a weekly chart, that clearly shows that sustained supply pressure is there in the stock. though long-term structure is bullish, but on the near-term to short-term, there could be pressure in the stock until the stock not crosses about 1020, mark. That's the immediate challenging level for the stock on the higher side. On the downside, stock is almost trying to defend its 200-day moving average, which is placed at around 950. So that is important and critical support area for the stock. 950 needs to watch closely at this juncture. If it slips below to 950, we could see furthermore supply pressure towards 920, even 900 kind of zone. If it's able to defend 950, so then some buying one can deploy in the stock. And on the breakout above 1000, we can one can add furthermore long position for upside target of 1050. As you asked about GPIL, for 1 year time frame,
Yeah.
though stock has shown some corrective move in last couple of months, but long-term structure is bullish. In this correction, I think one can buy and accumulate the stock. 900 is the immediate support area. If it slips below to 900, then next support would come at around 860. So I think you can buy and accumulate in the staggered manner in this decline. Wait for some corrective move towards 900, then you can start buying in this stock. Keep your stop loss at around 850. On the higher side, 980 to 1000 level is the major supply zone. If it crosses 1000, then rally can extend to 1100 to 1150 kind of zone also. So for positional perspective, 1150 would be the target on the stocks, but don't buy at current level. Wait for some correction. Around 900, you can start buying in this stock.
Okay, that's the view on a GPIL. Hope that answers your query. But with that, we are completely timed out. So this brings us to the end of the query segment. Rajesh, would like to thank you, as always, for joining in and sharing your thoughts with us, and of course, helping our viewers navigate with their positions and sharing your recommendations as well. Look forward to interacting with you again next week sometime.
My pleasure.
Well, with that, of course, we've come to the end of this edition of Opening Bell. We are leaving the markets, in the red zone, of course. 180-point cut on the Nifty, almost a 600-point cut on the Nifty. Almost all the sectors are trading in the red, led by IT and metals, and gainers are few and far between. Asian Paints and BPCL topping that very slim list of gainers. But with that, from the entire team, thanks a lot for watching, and of course, stay tuned to Money Control for all your other news and updates. I'll be back at 3:30 p.m. with closing bell.